So what inspired you to start working on this particular app?
Yeah, I've been investing since probably my first job. Saw the rise of crypto happen from 2014 and onward. I was at Zynga back in the day when, people were first starting to mine Bitcoin themselves. Um, and I think really over the last few years, the thing that's inspired me most is watching costs for people rise in general, and then them losing access from traditional financial means of building wealth over time. Specifically, like, most people under 40 can't afford to buy a house anymore. And so they're turning to alternative assets to be able to build wealth, crypto being one of them. But I think one of the big challenges in this space is that there's no guidance or democratized access to sophisticated investment strategies like you had in traditional finance before. And so I'll give you an example, for instance. So uh, over the past, call it 40, 50 years of traditional finance, people started investing in their retirement first with mutual funds and then brokerage accounts and then ETFs and then robo-advisors. And each of these kind of came a decade apart or so and democratized access for people to be able to invest in their future and in their retirement, making it cheaper, making it easier. We don't really have that in crypto yet. We just got ETFs, but they're single asset ETFs. So they're not really like baskets or multiple assets that you're investing in over time. And so we're just really missing this broader sense of, what do I invest in? What is the risk profile of it? How do I maximize it to make sure that I'm truly going to be building wealth over time?
So, I mean, that sounds great. Before we get into the actual app and how it works and, why it was built, what is your background and how did you get into the cryptocurrency space?
Yeah, so I guess just to introduce myself, I'm Bryan, the CEO of Sock. So Sock, our app, is the simplest way to build wealth with crypto. We help people invest in crypto based on their goals, their risk profile, and then help them earn yield over time so that they can compound their interest and grow their investments. I have about 15 years in product management and leadership roles in various companies across finance, health and fitness, social, marketplaces. So I worked at Zynga back in the day when Farmville was a thing. I was one of the first product folks at NerdWallet. I worked at MyFitnessPal very early on and helped scale HipCamp as well. And so just always been focused on consumer product and really focus on building things that help people accomplish their goals.
And so, what inspired you to step into the cryptocurrency space?
Yeah, so I'd previously been in fintech at NerdWallet and a little bit at Zynga as well. And I think again, kind of coming back to this problem of, there's no history, there's no guidance, there's no S&P 500 that you can look at and say it grows by 7% every year or whatever. And then kind of seeing the boom and bust cycle of 2021, 22, where everything was treated almost like a casino. And, I'm seeing this whole generation of people who are locked out of traditional finance to some degree in building wealth and saving for retirement, basically gambling. And so we wanted to build something that was truly helpful for them, that would help them understand the risk reward profile and get access to tools that mitigate that risk to some degree.
Right. And when we speak about cryptocurrency, at least I won't rope you into this, but whenever I talk to people about cryptocurrency, a large portion of them just think it's like, oh, money goes in and then it's lost to the ether. No pun
Right,
intended, to Ethereum. It's like they don't understand it. That's a very important word. And so
right,
applications like this, like the one we're about to talk about, are very important for people to understand what cryptocurrency is, what their money is doing, and also to be able to plan for the future. That's kind of a core tenet of
exactly.
crypto, which is, restoring sovereignty and also being able to plan for future events and not worrying about hyperinflation, etc. So, can you just give us an overview of your application?
Sure, yeah. So it's actually very simple. It's built for retail investors, so people who are used to traditional finance, maybe don't have that expertise, either technological or finance wise. And basically, it's focused on helping people build wealth. So we help people build wealth based on their goals, their risk profile, and then they earn compound interest along the way, which kind of helps them uh, smooth out any price volatility that may happen over time. As you know, like we've seen these boom and bust cycles, but in general, over a long enough timeline, everything goes up, right? And so, yeah, primarily we provide guidance and democratize access to interest rates from 5 to 15% with one simple click.
So how does this work? How does earning interest work on SOC, and how does this compare to a traditional bank?
Yeah, so I think it's easier to start with the frame of reference of a traditional bank. So, you have a savings account, right, at a traditional bank, and they're going to give you maybe 0.01% interest, or if you have a good one, maybe you can get 4 or 5%. But essentially, what they're doing with your money is lending it out to someone else. And so they're lending out your money to someone else who's borrowing that money at an even higher interest rate. So oftentimes it'll be 7, 8, 9, whatever. And they're keeping all of that profit for themselves. And so if you're in a bank that has, 1% or 0.1%, you're getting nothing and they're just making money off of your money. Uh, all of those loans are approved based on your credit score. So there's no collateral. It's just generally kind of this trust-based system that we've built over time, given your credit score. So, sometimes we'll run into problems where, thinking about like 2008, where the banks overlent money to underqualified borrowers, and then we saw a general collapse of the system, right? So that's how traditional finance work. In decentralized finance or in DeFi, essentially the way it works is your crypto provides liquidity to another platform, and usually that's a lending and borrowing platform. And so typically the borrowers are traders who are looking to essentially use collateral they have, another crypto token, to borrow against so that they can buy more of it. And so I'll give you an example. So maybe I have Ethereum. I want to buy a lot more of it. I'm going to take a loan out against the Ethereum I have, get USDC back from that, a stable coin, and then invest that stable coin into more Ethereum. And then hopefully, assuming that the price goes up, I can unwind this all and end up with more Ethereum than I had to begin with. But the interesting thing about crypto loans is that they are over collateralized, meaning if I want to borrow $100 worth of USDC, I better have a lot more than that in collateral. And then they are all baked into smart contracts, and so they will liquidate the second that the loan to value ratio changes. And what that means is basically, if let's say I have $100 worth of Ethereum, I want to borrow money against it. I'm only going to get $50 that I'm able to borrow against it, and that $100 is locked. The reason that is locked is because if the price fluctuates too much, if the price drops by 50%, the whole thing will get liquidated, and everyone who has lent that money will get their money back, and the borrower will essentially lose their collateral. So huge difference between traditional finance and decentralized finance.
Yeah, I hear that, Brian. But one of the problems with not just with soccer or anything like that, but one of the biggest problems with crypto is even trying to understand and get into it. Like the on-ramp is so tedious. And
Yes.
same thing for traditional finance. Like people don't like roping in, fiat systems and whatever, but even
Yep.
trying to understand and wrap your head around that is just like, what is going on?
Yeah, totally.
Unfortunately, the same thing is for crypto. So I know this is kind of like a hardball or challenging question, but just if we can entertain it, how do we get more people to understand crypto, explained like they're five? I think that is where
Yeah.
the biggest impact can be. Where, again, this is the Gen Z Diplomat podcast. Gen Z is going to have one of the biggest says and one of the biggest impacts in the crypto space. So how do we get most of them on board? How do we explain it to them like they're five without being condescending, obviously?
Yeah, absolutely. I think this is actually an enormous challenge to the space. I think in general, the best way to do it is to not over-explain things and to use analogs that already exist elsewhere in the world that they're used to. And so, like, even this conversation we just had about your savings account and what happens, like, most people don't even know that, right?
Right.
All they know is I log in to my bank or whatever, and I see my interest rate. And so, today, if you want to earn on your Ethereum, let's say, you've probably got to hop through two, three different apps. You've got to connect to your wallet. You've got to do all this crazy stuff. It feels scary. You don't know who to trust. And so that's actually one of the problems SOC is trying to solve is abstract all that away. You hold Ethereum, you tap a button, now you're earning interest on it.
Right.
Like that's what people are used to, right?
Yeah. Before it was kind of just you have to trade your privacy and your data for convenience, but now it's kind of like crypto doesn't really need privacy because everything is pseudonymous or anonymous, and
Right.
data doesn't really matter because Web3 is not really based around that. That was pretty much a Web2 phenomenon. So it's literally
Right.
just, convenience, which is
Yes.
such a strange and fresh idea, fresh experience. Okay, let's move on. So, what is account abstraction and how do you use it to provide a more seamless user experience?
Yeah. So account abstraction is a new Ethereum based technology. And essentially, what it allows you to do as a user is to delegate permissions to a company like Zoc or someone else to automate some of your finances and to make things a little bit easier for you. So, for instance, I'll give you a really simple example. So, let's say you hold Ethereum and you want to have it automatically sell when it hits, $4,000 or whatever, which it recently did. In the old world, every transaction you would ever have to take had to be signed synchronously, meaning you had to click a button, scan your face, do whatever. In the new world, that goes away, and you can delegate very fine-grained permissions to any app to either help you manage your crypto or to even make your account simpler. So for instance, in our app, like we can make it really easy for you to not worry so much about understanding your seed phrase. We just kind of store it to your phone and you don't have to worry about it and it'll get backed up and it'll always be there. That wasn't really possible before. You would always have to get some sort of synchronous action anytime you wanted to view it, to use it, to do anything. So this just makes the whole experience less frictional.
Mm. Yeah, the friction is one thing where I wanted to touch on. What challenges did you have to face and overcome in building this application? You said you were already in the consumer product, tech space, but you had to onboard yourself to crypto, and then you had to onboard yourself into like this intersection between building a bridge for fiat people to come to crypto,
Yep.
and then probably a bunch of other things.
Yeah, I think for me it was a couple things. Like one, I would just say like the space overall was really challenging to wrap our heads around coming from traditional finance because, like you said, everything is pseudonymous or anonymous, is completely open. And then we kind of had to like figure out where we lived on this spectrum between, everything being completely open and available, even our source code, to, a traditional kind of Web2 app. And a big part of that was figuring out what people actually care about.
Mhm.
Um, what's interesting is most people don't care about the anonymity or
Hmm.
the open source nature of a lot of this stuff. What they really care about is, especially retail users, is making money, right? Like they want to invest. So that's the primary function. Um, and then I would say the second thing was, account abstraction was relatively new as we were building this. It had just come out after we were already probably a few months in, and we really wanted to take advantage of it. And there are essentially no guardrails or guidelines about what good looks like. And so we had to create kind of our own perspective on what good looks like. And a big part of that is making it very clear what's happening at all times, letting you know what permissions you're giving us, what actions we can perform on your behalf, and just being like incredibly transparent about that, similar to like, what you're used to with Google or Facebook or anyone else.
Well, I don't know if I would put transparency and Facebook and Google in the same
Sure.
sentence, but I know what you mean. But there are two threads I kind of want to pull on. You said that there's a different, not difference, not that you said this, but there is kind of this dichotomy between people in crypto that care about the ideas, about the fundamentals, and then as you were talking about the retail investors that just care about making money. So can you speak to this kind of just like I fall into the former group of I really care about the ideas and the things that can be accomplished with crypto. Obviously, it has a big influence on the amount of money you can make, save,
Yeah.
and use. But I don't know, like where do you fall if you were to be honest, and which speaks to you more?
Yeah. I'm gonna give you a cheesy answer, which is
Okay.
I'm probably somewhere in the middle,
Okay.
and I'm not just saying that, but so I think this happens with every technological innovation ever that we've ever been through, and there's always the early adopters who get really excited and inspired by the technology and really want to keep it to the core principles by which it was developed. And so like email is a great example, right? It's just a protocol, but now we have Gmail and Outlook, and they're kind of like the main ways that everyone consumes it.
Mhm.
Um, and so, I feel like we are in the very early stages of blockchain technology. We've built the plumbing and the electrical, and now it's time to build the houses, right? And the houses are really things that excite your everyday consumer, right? Like my mom. Um, I want her to use our app, right? Like she doesn't know much about blockchain. She doesn't care about, anonymous transactions or any of that. She just probably wants to invest and make a little bit of money. And that's specifically our app. We're an investing app, obviously, but there are tons of use cases. So for me, I think it's like, when did you come in? Because I think if you came in early, you really care about the infrastructure, you care about the plumbing and the electrical and the the principles by which all of that was built. But to get mainstream, we have to think about like what does the house look like and who's buying it.
You said that there are a bunch of apps. Are there any competitors? I mean, we don't have to name them, but how
Sure.
do you compete in this space of earning interest on your crypto and teaching people about crypto?
Yeah. So I think this kind of goes back to the same analogy we were just talking about because I think the way to do it today is really complicated. And so if you want to earn interest, you've got to have both deep finance and technical experience and understanding. And I think the people who tend to do it today are more either institutional or day traders, like degen types who are like who know what they're doing,
Hmm.
who are making trades at all times, and that's kind of their job. Um, our goal is to democratize those strategies to retail, and so I don't think there's a great alternative, to be honest.
Right.
I kind of liken it to you know um, in the early 2010s, rich people were all doing tax loss harvesting and stuff like that, and most retail investors had no idea how to do that, right? Until
Mm.
things like Betterment or Wealthfront or Wealthsimple came along. Um, and so we're kind of in that phase.
See, but Brian, one of the things I know you're such a like you have a smooth voice and you're being very clear in what SOC is and what your intentions are. But the crypto industry has experienced not folks like you, but folks who kind of embody this facade of being benign. Not that, again, I'm not trying to say that you're doing this, but like we saw the Sam Bankman-Fried fiasco,
Sure.
and as soon as I was introduced to that, I was just completely turned off to crypto
Yeah.
wholesale. Then I had to work my way back.
Yeah.
And trust is a big part of, because it's money,
Absolutely.
right? At the end of the day, we're putting your
Yeah.
money and we're trusting you and the application to not rug pull, to not like take
Yeah.
everything and run. How do the masses onboard themselves and trust yourself and others,
Yeah.
trust crypto again, or
Yeah.
just in general?
Yeah. So I think this is where that spectrum comes into play that we were talking about, like the difference between, how open are you and how closed are you?
Mm.
FTX was actually rather closed. They were a brokerage. They held all of your assets. And obviously, they didn't exactly treat them with the respect they deserved, right? And so this is again where I fall in the middle because I think self-custody is incredibly important. And not enough people understand it. And so I think the way to help people understand it is it's really a safety feature. It means that, apps like Sock can't touch your money. It means
Mm.
that we can't loan it out or sell it or manage it in any way whatsoever. It is yours and yours alone, and you are the only person who can, you know, change what it's doing. And so like I think that's critical and we need to get more people over the hump of understanding, why is self-custody actually safer? And then how do we make self-custody the user experience simpler because it has been a big hurdle as well.
And then inevitably this turns to regulation and the
Yeah.
legality of all of these things. Have you thought about, could you guys get, I don't know, audited by the SEC, or are these even, am I using these terms correctly? Is this a fear, a worry? What are your thoughts on this?
Yeah, absolutely. I think especially in the US, the regulatory landscape has been complicated,
Fuzzy.
I'll
Yeah.
say. I think, in Europe, you now have MiCA, which is a very clear framework for how brokerages or wallets need to act in service of their customers. The US is nowhere near having something like that, right? And so it's still very much the Wild West here. And then obviously the SEC has been very antagonistic towards the crypto industry in general. So we have a legal counsel. We talk to them every time we launch a feature. We make sure that we are operating within the laws within the countries that we operate within. And then again, this is where I think self-custody adds a lot of value, because as a self-custodian, you are essentially your own bank, and there is far less regulatory scrutiny over what happens because there is no third party holding your money. So, we do everything we can to conform to the rules that we need to. We go through processes when we launch features to make sure that we're in line. But ultimately, I think, probably in the next year or two, the US in particular is going to hopefully have some regulatory framework that helps us operate even more safely in the interest of our users.
Okay. On our pre-call, we talked about your not reluctance, but you guys don't allow trading meme coins on
Right.
SOC. So what is that? Can you speak to that more?
Yeah, sure. So essentially, one of the features that we have in SOC is what we call a SOC score. And so we look at every single token that we offer by a few different dimensions. So there's volatility. So how much of the price of this thing change compared to the median real market? Some complex algorithm stuff in there. I'm kind of oversimplifying. There's the economics of it, and so similar to cash, it's like you can print more tokens at any time. So which is obviously inflationary. So how are the economics of the token set up? And then the third one is essentially the maturity of it. And so how long has it been around? What is the market cap? And essentially what you often see, particularly with meme coins, is that they're going to fail on at least one or two of those.
Mm.
And again, going back to our mission of helping people build long-term wealth, meme coins are a casino in our opinion. Like you're betting on a token based on the hype that's been built around it, on the hope that it's going to 10x quickly and that you can cash out. That's it. And I'm not trying to hate on people who mess with those. I think, you know, your odds of winning are pretty low.
Mm.
You're always going to hear the story about the 1 in 1,000 person who 10x their money, but it's usually at the expense of everyone else. And so, we're trying to build a product that helps people sustainably build wealth over time. So we don't offer the ability to trade meme coins.
See, you can refuse to hate on those people, but I fully hate those people because they give crypto such a bad name. Every time it's like, oh, are you invested in whatever? Like, I'm a Bitcoin maxi until I know better.
Yeah,
Not that I hate Ethereum or Cardano or anything, but whenever I talk to people about investing in Bitcoin, they're all just like, oh, it's a Ponzi scheme, it's a pyramid scheme, it's a scam, you put your money in and it disappears. And I feel like those that are trading what they're doing is they're referring to meme coins, right? And I don't understand why we can't get more people to understand the crypto fundamentals. Is this
right.
just like a facet of the technology being in its infancy? Like it's just a very small minority of people understand the technology and then it's difficult to give that much understanding wholesale? Or like
Mm.
what is this kind of fuzziness
Yeah,
of understanding wholesale of cryptocurrency, of the crypto industry, and what we're trying to do here?
yeah, I think that's a great question. I think it's kind of the result of a lack of regulation.
Hmm.
So essentially, it's a combination of new technology and lack of regulation, which
Right.
always happens. It's happening in AI too. So
Right.
um, kind of think of it like this. So we've built, this really complicated banking system that is completely open and transparent, and anyone can use it. And so, of course, by doing that, there's going to be people who jump in and scam it, right? Because it's completely, anonymous, it's easy to do, and as long as you understand the technology, you can take advantage of people. And that, of course, then reflects poorly on the industry as a whole, gives people this perception that, it's all a rug pull. But I think if there were more regulatory clarity and there was guardrails around the technology that prevented, things like meme coins from popping up, or things that, generally don't have utility from popping up, we will be in a better spot, both from a perception perspective and from an end user perspective.
See, again, I just want to touch on that. I want to double click into crypto regulation just for a second because I actually have this really dire question in my mind. To me, asking for regulation outside of the crypto industry doesn't really make any sense. Because crypto
Mm,
is supposed to be this like decentralized, trustless, anonymous,
sure.
pseudonymous like place where people can come in. They don't have to worry about the fiat system or Web 2. But then on the flip side, we're not that we're saying this, but we're waiting for regulation to come outside.
Right.
Is that not ironic? Not like hypocritical of what we're trying to accomplish? How do we, I guess there's two questions, but first of all, is this not ironic? And second of all, how do we create decentralized regulation in that way?
Yeah, that's a great question. So it's definitely ironic. It's definitely happened in the past. So even just going back to email, right? It's protocol, like spam, one of the first use cases of email, because there was no regulation around, hey, you can't do this. It's bothersome for people. And so this is a cycle that we go through every 10 years, anytime there's some sort of new, technological innovation,
Mhm.
is the technology gets ahead of the regulators, bad stuff happens, and then the regulators have to come back in and fix it. On the second question, what do we do to create some form of decentralized regulation? Yeah, that's a really cool question. I'm okay. I'm going to give you a hot take. I'm of the opinion that like the people who are building all of this don't want that.
Mm.
Um, so again, like going back to starting with permissionless to anonymous to just completely distributed, those principles in general do not do not pair well with regulation, right? Like they're opposing forces. So I think to some degree you'll see, like the Ethereum Foundation or, Polygon or whatever, kind of trying to create some lightweight guardrails around how to use the protocols they've enabled.
Mhm.
But I don't think that they are regulating the use cases that people are building on top of those platforms. They just want to stay out of that. So
Yeah.
I yeah, it's tough, right? Like the inventors of email didn't, build can spam, right?
Mhm. Yeah.
So
I totally agree with what you're saying. It's just I obviously I need to understand it more. I need to read more into this. I need to do more research. But it's like obviously we need regulation. Or maybe we don't. Maybe we just need more understanding. Because if people understood what the technology is, what it does not do, and the risks, then you wouldn't really need any kind of centralized or decentralized regulation. Because I'm of the mind where if the collective understands enough, they kind of regulate themselves.
I mean, I think that's part of what we've been trying to do with like the no meme coin stance.
Right.
But so I don't think that that's normal. And I'll tell you why. So bigger exchanges, basically most tech companies are venture backed, meaning they're getting investment from some third party, and the expectation is that they grow, grow, grow. And so if you are a platform and you have an opportunity to earn, revenue on whatever the latest meme coin is, are you going to choose that to be able to continue to grow, and tell your investors, look at how great we're doing? Or are you going to do the quote right thing and keep your users safe? And you could justify it to yourself by saying, oh, we're giving our users what they want. They told us they want, meme coin XYZ, but you're just enabling the problem. You're not in the guise of growth and revenue.
Right, like you can't bring the bad apple of fiat into the pure basket of crypto and then say, "Oh, like, we didn't know" or whatever. It's like it's
Right.
you're corrupting the whole to try to benefit off of this little figment. Anyway,
Yeah.
speaking of community, so do you have any thoughts on communities? Like, do you guys prop up your community? Like, what are your thoughts on finance and communities? Because it's both a gift and a curse. So, what are your thoughts on this?
Yeah. So I'm not a huge fan of creating of company owned communities. I'm fine if there are communities that are organic and built up of people who love a product, right? Like, and depending on your product, it may or may not make sense for you to engage with that community or even to create that community. In the world of finance, I feel like it's dangerous. Um, I think it, to your point, it's a double-edged sword because on one side, you have people helping each other understand the challenges of the technology, on-ramping, getting into the space, but on the other, you have everyone shilling whatever token
Right.
you're trying to skyrocket up, right? Like, and I'm a member of a lot of communities around crypto, and like, probably half the posts are robots or fake accounts just promoting whatever thing that they're trying to promote at the moment. It's not helpful. And again, it kind of perpetuates this whole perception that the entire space is just kind of rigged. So yeah, I mean, we're not trying to be out there building a community of our users. I think it makes a ton of sense if you're like a SaaS company like Figma or something like that, and
Mhm.
people are trying to help each other be more productive. But yeah, I don't know. It's a tough one.
No, that's a great answer, and it's an important answer just because, you know, we've realized, and this is going to be such a stupid saying that I'm about to partake in, but we've realized that money is really important, and we haven't been thinking about it at all. Not that we
Right.
haven't been thinking about it in the right ways. Most people have not thought about money at all. And we see like this trend of getting into personal finance, and then you hear this like riff that everybody thinks is special, but everybody has it of, oh, they don't teach you personal finance or taxes in school. I heard everybody say this. And it's true.
Sure.
But most people don't like school anyway, so it's like I just learn it yourself. Speaking of communities, we've talked about Bitcoin, we talked about Ethereum. Do you have any thoughts on, I don't want to be divisive, but Bitcoin versus Ethereum? Which is the more interesting cryptocurrency, crypto technology, and which do you think is going to win out in the long run? Is there a space for them to coexist?
Yeah, absolutely. I think they're very different. So I know everybody says this, but Bitcoin's kind of like digital gold, right? There is a finite supply of it. You can't really do much with it beyond hold it. I mean, you can, in some cases make payments, or there are some like, traditional finance ways to use it. But, generally speaking, it is very similar to digital gold in that it's like almost like a commodity that is in short supply. And then Ethereum is actually like a full-blown ecosystem. They've enabled smart contracts, smart wallets, all of these different things where you can codify a lot of the elements of the financial system to prevent bad things from happening. So, even in the last couple of years when we saw Silicon Valley Bank, that wouldn't have happened had things been on chain on the Ethereum ecosystem, and there were codified rules around what happens when basically things get liquid when certain thresholds are met. So yeah, I think about them very differently. I think there's also other ones that are really interesting. The Solana ecosystem is continuing to grow. I think that's going to be interesting. The challenge between them all, I think, is that it's painful that they're not interoperable. They are
Right.
all their own little islands. And so this is kind of the thing that centralized exchanges solve, where they kind of abstracted that away from you in exchange for your ownership of the tokens. Um, but I think as long as there's a few different paths that are being developed now that are aimed at overcoming that challenge. And as long as one or many of them succeed, I think that'll make things a lot simpler for people.
So if we could just double click into that because it sounds interesting. So two questions. What's going on in the Solana ecosystem that interests you? And number two is
Hmm.
what are the patents that you were talking about? How are they solving interoperability?
Yeah, so I think Solana is interesting just because it's really got high throughput when compared to some of the other chains, and so that enables a lot of like everyday utilitarian use cases. So there's like an old video of Brian Armstrong, the CEO of Coinbase, trying to like buy something in the Coinbase cafeteria using Bitcoin, and it takes like several minutes. It's just slow. It takes a while for everything to settle. And so I think Ethereum became a lot faster, Solana's even faster, right? And they all use different mechanisms for settlement, essentially.
Hmm.
Um, I think there's the interesting thing about making them interoperable is today the way to do it is essentially it's called bridging. And what you're doing is you're moving, let's say I have Ethereum on the Ethereum chain and I want to move it to Arbitrum or something. I'm basically burning the tokens on Ethereum and minting them on Arbitrum.
Mm.
And so there's inherent risk in doing that. It's costly. It could go wrong. And so I think there are a few folks looking into different infrastructural layers where there are kind of elements of the ecosystem that are shared across all the different chains where you can instantly settle in any one of the tokens across chain. So kind of like a something similar to like, how euros to USD works, where it's like we do the quick translation, it settles and everything goes through.
Right.
But there are probably 3 or 4 different technical approaches for how that's going to happen. And
Sure.
I'm not technically adept enough
No, no,
to
no,
go much
no.
deeper than that.
I wouldn't even want to double click into that just because like the technicalities of crypto, this we're gonna have like one person listening to this. Um, so what trends are interesting to you in terms of crypto? I'm not gonna ask you like what price will Ethereum or Bitcoin reach in the next 10 years because that's just uninteresting to me. But do you think that Web3 is going to undergo like this massive boom? Is it going to be very gradual? Are we going to see again like these bull markets and then bear for 2 years and then bull and then
Yeah.
bear?
Yeah.
What are you planning for as well?
Yeah. So I think a couple things. Like one is I think regulation is coming and it has to come. And I think that's generally a good thing. And then as part of that, and we're already seeing this, is the institutional level, so the traditional finance banks, the brokerage firms, et cetera, they're all getting in on this, right? And so we see that today with like the ETFs that launched in the US and some of the big investment banks holding hundreds of millions of dollars in Bitcoin. So I think the more of that happens, the more it legitimizes the space and the more it will enable regulation that enables regular kind of use cases
Mhm.
that um, legitimize the products themselves over time. Um, yeah,
Sorry,
go ahead. Sorry.
can I just interject?
Yeah, yeah,
Do investment banks that hold hundreds of millions of dollars in crypto, does that legitimize the space? Like, I thought the point was to get away from those from those folks.
yeah. I mean, I think it legitimizes the space in terms of certainly regulators and certainly retail investors who maybe were afraid to get in, who can now do it through their brokerage firm or something else.
Right. So like, oh, my like this investment bank XYZ invested whatever hundreds of millions. So obviously it's safe because they've probably done the research and the risk
Right.
calculation. Oh,
Right.
that's annoying.
Or I can buy Bitcoin in my Fidelity account, right? Like that
Mm,
legitimizes things because before, crypto was seen as this outsider asset class that, was for, you know, Bitcoin maxis and blockchain people and all of that. And so now it's like, yeah, anybody with a brokerage account can buy it. So that definitely legitimizes things.
But they don't understand the not your keys, not your coins,
They don't.
problem. They don't understand why they need self-custodial access,
That's
which is where
right.
SOC comes in.
Right. And I think too, like, it's interesting too because they've been usually the people who have brokerage accounts tend to be a little bit older, which means they went through 2008 and they saw all the banks closing and the run on the banks, and so that clearly didn't scare them enough to get out of the centralized financial system. So it is what it is. But yeah, I think institutions are going to go hard on crypto, and then I think they're going to start using it for their own uses. So, even folks like Visa and MasterCard are building their own blockchains. It's faster. It, gives them the opportunity to put more real world assets on chain. They can do corporate governance on chain. And so suddenly you have all this stuff that is essentially these decentralized ledgers, but they're sort of closed systems owned by individual companies.
Do you foresee a future where I can refuse to touch the fiat system? So I'm earning interest on my crypto on SOC. I can transfer my money to, wherever, my wallet on my
Mhm.
phone, and I can maybe go to Starbucks or Walmart or the Apple Store and pay with Bitcoin, which I wouldn't recommend, or Ethereum or whatever. So I don't
Yeah.
necessarily touch the euro, the dollar, the yen, the yuan. Like I don't have to touch any of the fiat systems. Is well, first of all, is this a realistic future? I think the answer is yes, but is this like should we expect do we want this future is what I'm asking. Like
Yeah.
is this like something that we should actually use and look forward to? Or
Yeah.
are there a lot of security risks and everything associated?
It's a good question. So I think it's definitely a future I see. I think the question is when. And so the reason I say that is because the traditional finance systems, like the people who issue credit cards, they are highly incentivized to keep things in fiat because they own the card networks, right? So every time you swipe your card, they take a tiny transaction fee off of the merchant that pays them. So maybe you're buying a candy bar for a dollar, and they get 3 cents.
I wish candy bars were a dollar. Sorry, go ahead.
Yeah, yeah, good point. Yeah, you used to be able to. Um, so you can do this today, even with crypto, with Bitcoin, with Ethereum, with stable coins especially, but it ends up being really costly because the bank ends up having to do essentially the foreign exchange between your crypto and the fiat currency, and then they do the settlement, which takes the fees on top of it. And so now you're spending $1.20 or $1.10 for what would have cost you a dollar before. So I think in the long term, though, this will change because many countries are looking at central bank digital currencies, what are called CBDCs. And so this is rather than printing paper money or coins, like can we just put it all on chain? Because ultimately that's what happens now when you're using your phone and you're in Venmo or whatever app. It's all happening digitally. No one's like mailing money to each other. So why do we need to keep printing money? Um, and I think the move to a CBDC will enable multi-currency, multi-cryptocurrency settlement over time.
I have to think about CBDCs more. I have to read more into them. But just for this conversation, are CBDCs a net positive or a net negative? Do we want them?
Hmm.
Like, is this going to give us more sovereignty or take more away implicitly or
I
subtly?
think that's the big question that people are asking. My perspective, my 2 cents, is I think it's a good thing because it's going to enable faster, cheaper transactions for everyone globally, which means if you want to send money to another country, there's no, to it taking 3 days and charging you a 5% fee or whatever. It'll be instant and free. That's the dream state, right? On the sovereignty side of things, that is the debate. And The reality is that today, if you want to open a bank account, you've got to give away a lot of information.
Mhm.
You've got to give your social or your passport, whatever. Um, and then they're essentially already storing every transaction you make against your account. A CBDC basically does the same thing, except it's on a distributed ledger that is probably owned by the government. Um, so yeah, I think it's going to give them more transparency into what people are spending money on and where.
Mhm.
But I think also, there are some upsides to it.
Sure. Yeah, we can worry about the future when the future arrives. Let's talk about what exists right now. What what features can we look forward to on SOC and that are in the pipeline that are upcoming?
Yeah. So I think the big one is we're about to launch the ability for you to earn yield on Bitcoin and Ethereum. You'll be getting like 5 to 8%, which is huge. And so we're going to continue to offer new yield opportunities for people to earn interest on their crypto, um, and help them grow their money. Other than that, we really want to start thinking about new customer types for our platform too, and eventually get into the daily use cases, some of the things like you were mentioning, where it'd be great to be able to, tap my phone and pay with sock.
That'd be fantastic. It also would be like I would want to tap my phone to another SOC user to exchange. That'd be very fun.
Yep.
What advice do you have for aspiring crypto technologists or people in the crypto space? If it seems like this space is not going away anytime soon. There's a lot
Absolutely.
of very smart people, yourself included. They're doing very cool, very innovative things. How do we get more people in this space inspired and inspired in the right way, not like number go up, but society go up?
Yeah. Yeah, I think this goes back to kind of what we were talking about before around like building the plumbing and electricity versus the houses. Like, I think more and more companies are going to start building houses, right? Because the tech is there, the foundations are there. There's obviously always more to do and make them better, and even the interoperability thing we were talking about. But I think people really need to focus on the value that they can bring to their end user and not just the technology. When I look at back at the last 10 years, it's been all about the tech. But I think if we want to onboard new people, it's got to be what is the value to that person that I can get them excited about, that they want to use every day, that they want to tell their friends about.
Fantastic. Brian, this has been such an enlightening and thrilling conversation. And I don't feel like this is going to be the last time that you and I speak together.
I hope
So
not.
where can we find SOC? Where can we find you? How do we download
Yeah,
SOC?
yeah, you can get Sock in either the Android App Store or the Apple App Store. Just search for Sock. We should pop up, or you can visit us at sock.app on the web, and that'll direct you to the appropriate store. I'm on all the different social media platforms. Just search for me, Bryan Levine, and then Sock is as well. We're usually Sock Finance.
Fantastic. Brian, it was great talking with you today.
Great talking with you too. Thanks so much.